Hey Tackle Traders, welcome back to the Rookie Blog. This week we're doing the live trade part 2. All right, so last week we looked at CRE. We found the setup we liked. We did our market bias. We were looking at the markets. They were all kind of showing that they were, mildly bullish. We ran through our watch list, or actually in this case we did a scan, and we found this particular candidate. We then did our set principle. We figured out our stop, entry, and target, and we kind of left it there. So there's a few other things we got to do before we do a trade. Now, of course, this has been an extra week because we couldn't fit it all into one video, but this week we can see that certain things have changed here. So our entry price was going to be $46.12. If you guys remember from last week, that was our set. That was our entry price. That was 10% of an ATR above the high of the day, and you can see here that immediately after we put on this trade, or after we put in the order for this trade, it dropped. Well, we can see here that the high of the day was only 46.05. So what that meant is that we actually didn't get into this trade. Okay, which is a good thing, right? This is why we use the techniques that we do to get into this, right? So we didn't get into this trade, and it pulled back even further, which again, totally fine, right? So we see that we had another doji looking candle here, similar to that one with a broader range to it. Well, of course, we got our confirmation candle the very next day. So does this mean we can't get into this trade? No. It just means we have to reset some things. Okay, and so the reality is here, we're looking at a bit of resistance right where we are right now. I would say right about that 43, right around that 44 level, I would say is a bit of resistance there. And the reason I say that is because back here it was resistance, here it was resistance, now it's support. It was support there before it broke through, and now it's popping up. So can we still get into this trade? Absolutely. So let's redo some things here. If I pull up our little paint thing here, you guys can see that I have last week's stop loss, entry, and target. This week we're going to go a little bit further. We're going to talk about what our max risk is going to be. We're going to do some position sizing, and we're going to check the sector again. The first thing we probably want to do before we run all these numbers is check the sector, because the sector, if it's not going in the right way, for some folks that's going to be a no-go, and for other folks it's going to be, okay, well, I'd prefer it that way, but they still might take the trade. Again, it's the conservative versus the more aggressive stance, and either one is fine as long as you stay within your parameters of of your max loss. Okay, so let's go back to this here now. CRE, what is CRE? Okay, well, we got to find that out. So one of the things we can do is we can pop over to Yahoo Finance here. I put in CRE, pulled it up here, and of course it gives you a summary, tells you what's going on. But if we go to profile here, click on this profile tab, right there it tells us it's in this technology sector and it's in the semiconductors industry. So we have an opportunity there. We can go back to our charts here and we can look up the sector. So the technology sector is XLK. Okay, so if we're looking at this, we want to look a little bit longer term. So pop this out. This is a 1 year chart. Still nice and bullish. Got some pullback here. We're making higher lows, right? We're making higher highs. So it's still bullish and a nice deep pullback here, showing us some confirmation of the upside. We're liking the chart right now. So now if we look at the sector, what are we seeing? Well, we're seeing the same thing. Technology we know has been pretty bullish. It's got some deep pullbacks here, but you can see higher low, higher low, higher low, right? So as far as I'm concerned, the sector's playing ball with us. Okay, so that adds a little bit of extra I don't want to say success. It gives us a little bit of a warm, fuzzy feeling that at least the sector is going in the right direction that our trade is. So maybe it gives us a little bit more of a leg up. Okay, so that's kind of how we do our sector checking. Now you could check the industry as well. You could check the semiconductor and break it down that way as well. But I think for now, the sector checking is probably enough for us to do this. So now let's start looking at our numbers again here, and we'll go through all the numbers. With this video, we'll just go through the basic way to do it, and the next week I'm going to go through the spreadsheets. We'll do a third video on how to do this trade so that you guys can see it. Okay, so we had a nice deep pullback. We've got our reversal candle. We've got our confirmation. Now we got to get up above this thing. So again, we're going to use the same technique that we used last week, right? I'm going to pull this up. So this was last week's numbers. So we're going to make some new numbers because the trade has changed. Okay, so we'll call this the new stop loss. Okay, and we're going to call that, we'll find out the entry first. So we'll leave that like that. And we'll get another text box. Maybe if it works for me. We'll put in our entry here, entry price. Call it the new entry. So one of the things that I wanted to mention too is you'll notice that we didn't abandon this trade just because it didn't work out the first time. If it gives us another signal to get back in, there's absolutely nothing wrong with getting back in. Okay, so we're going to do the same thing as before. 10% of the ATR. I'll make this box a little bit bigger. Okay. 10% of the ATR above the high, right? Okay, so let's go back, look at our chart. What was our high price here? Our high price was 44.04. Okay, our ATR is up in the left-hand corner there. It's 1.64, so that's about 16 cents, right? So go back here. So this is going to equal 1.64. I'm going to multiply that by 10%. Okay, so that's going to give us 0.164 cents. Make this box a little bit bigger. Okay, then we're going to add our high, which was 44.04, which equals, what are we looking at there? 44.20. Is that close enough? So 44.20. 44.20. Oh, not 444.20. Okay. So now we've got our entry. That's our entry price. Okay. Go back here. Our target, pretty much once it gets above this level, you may find some resistance at 46, but I'd be pretty confident that it could make it back up to that 50 level. There's nothing really showing me big time that, like I said, yeah, like I said, maybe the 46 would give us a little bit of pause, but I could see it getting back up to 50. So we're going to leave our target the same. Okay, everybody cool with that? Again, targeting is kind of a part art form, part science, right? So target's going to remain at the $50 level, okay? Because I honestly believe that it could get back to there if it breaks above that 44. Okay, so now we got to do our stop loss, right? So what was our stop loss before? I think we used that technique, probably a 50% of an ATR above the low of the day. So, or sorry, I apologize, 10% of an ATR below the low of the day. So this is the candle we're using. So the low of that was, it was a low 41.80. So minus 16 cents from that. So what are we looking at? 41.64 sounds about right. Okay, I'll let you guys do that math, but I'm thinking that's about right. So we'll just put in our new stop loss here. Our stop loss again, we'll actually put in the words here. So 10% of ATR below the low. Okay. Which equals, our low was 41.80 minus 16 cents, which is 10% of our ATR. We don't need to do that again, which I believe, like I said, so that'd be 70, that'd be 64. So we'd be looking at 41.64 as our stop loss. Okay, so our target's 50. Our stop loss is 41.64. Okay, so what we're looking at with this chart here is if this thing pops up above here, we get in. If it doesn't, then again, we won't be entered in this trade if it decides to turn down. And we're putting our stop loss somewhere down here. Okay, so right about there. Okay, so if it got below this candle, we're going to get out and move on to the next trade. So what we didn't do last week was figuring out our max risk. Oh, didn't want to do that. 4164. Okay, so now that we have this, we can figure out what's our max risk of this trade. Okay, this is going to help us with our position sizing, which is the most important. Okay, so our max risk is basically our entry minus our stop loss. Okay, which in this case is pretty easy. We got in at 44.20, 44.20, and we minused 41.64, which comes out to, what are we looking at there? 44.20 minus 41.64, $2.56. So we're risking $2.56 per share. Okay, that's our max risk. So again, we multiply that by the number of shares that we have. It's pretty easy to figure out. Okay. Now we need one more piece of information. We need our max reward, right? So if we let this trade go and it gets to our first target, which is our 50, this over here. So our max reward is going to equal our target minus our stop loss, or sorry, our entry. Okay, so again, these are all pretty easy, but this is what you got to go through to make sure you're doing things right. So our target in this case was the $50 level minus the entry of 44.20 minus the 44.20. Not sure why that keeps kicking out on me there, but we'll persevere. 44.20, which equals, what are we looking at there? 50 minus 44.20 is $5.80. So $5.80. Okay, so now we're looking for a 2-to-1 minimum risk reward. Now that's just our basic for stock. Again, if your system requires something more than that, you'll have to figure that out. So we just go 580, which is our reward, divided by our risk, which is 256, and it comes out to 2.26 to 1. Okay, so this is a number that we must calculate to know. We'll put this up here, right? Risk reward ratio. Okay, and again, very easy to figure out. We just take our reward, right, which our reward was 580. We divide that by our 256, and that comes out to 2.26, basically 2.27 to 1. Okay, so again, our minimum for this particular system minimum is 2-to-1. So that meets our criteria. So now we're at a point here where we we have all the main numbers that we need, but now we got to decide how many shares that we would buy that's appropriate for our particular portfolio. Okay, so let's say we've got a 10,000. Well, let's do it because we're going to use the journal that has 50 in it. So in this particular case, let's say we've got a portfolio size. This obviously you guys can change the numbers as required. So portfolio size will be 50K. Okay. All right. So if that's the case, if our portfolio size is 50K, in this particular case, we're only willing to risk 1%. Okay, that's a very conservative number, but the reality is that's where 1 to 2% is what we recommend for newer traders. Okay, so if we're doing 1% max risk, on any one trade. Okay. So in that particular case, that's easy to see. It's $500 is our max risk. Okay. All right. So if we're losing $256 per share, and the most we're willing to risk is $500, then this is pretty easy to figure out, right? So we take our $500 max loss, we divide it by $2.56 because that's the most we're going to risk, and then we figure it out, and it comes out to 195 shares. Okay. Now, if we lost $2.56 on 195 shares, that would come out to approximately $500. Okay. This is position sizing. The reason we do this is because we never really know, what happens if something goes past your stop, if it gets gapped past your stop loss, or if there's a black swan event or something like this. This is why position sizing, this is position sizing right here. This whole thing, when you take your portfolio size, you figure out your max risk, and then you divide it and you come up with a number of shares that you can buy comfortably and still stay within your risk tolerance. Okay, so this is the most important thing. This will keep you around in trading. The reality is we can do a lot of, we can do a lot of technical analysis. Fundamentally, everything can be all right, and the trade can still go against us. This is what keeps us in the game, and this is what we have to protect ourselves against. Okay, so at this point in time, what we can do is we can enter a trade, and we can buy up to 195 shares. Okay, so at this point in time, we go in here. Again, I'm going to have to put this on in a paper trading account, so I'm just going to show you guys the actual trade, and then I'll put it on in the paper trade account, and we'll follow it along. Okay, so in this particular case, we're going to buy some stock. We're going to buy it. This is CRE. So we're only going to buy it. We have to do this the proper way. So we want to put a stop limit in. We're only willing to buy this if it gets to 44.20. Okay, so that'll be our stop price, 44.20. That will trigger it, and then maybe we'll give it a nickel. Let's say we're willing to pay an extra nickel just to get into the stock. Okay, so we're going to buy 100 shares, but we can actually buy 195, right? That's what our position sizing tells us. Okay, so basically we're putting in a stop limit order. We're going to leave it as a day order. Okay, and the reason we're doing that is because tomorrow, if it doesn't hit our stop, it doesn't hit our entry, then we may want to change some things. Okay, but the reality is we're going to leave it for this now. Now we could add to this. We could throw in our target orders and our stop losses all at once as well. So let's go with that. So if we go in and we do first triggers OCO, or actually we could do first triggers, yeah, we want to do OCO because one cancels the other. Okay, so what we're going to do is we're going to make an opposite order here. Okay, so this is going to get us out. Now we're going to make a second opposite order here. Okay, so now we have two of them. Now one of them we're going to put as a stop. Okay, we're going to put this as a stop order. Okay, now it's going to go in as a market order, and our stop loss was at 41.64, if I remember correctly. And now we're going to have a sell stop limit, okay, or sell limit order, and we're going to sell it right at we'll put $50 in here. Okay. So now we can confirm and send these. So basically what it says is this number one order, when it goes in, it's going to buy us 195 shares at this price or better. Okay, or sorry, but it won't. It's either 44.20 or above. Okay. Then what is going to happen is it's going to either sell when it hits 41.64, it gets us out at a loss, or number three, it will sell the shares for $50 if it hits our target. Okay, so that's your three orders. You all got it set up there, and now we can follow it along. Okay, so that's how we put in those orders to buy stock. This is an order that I will put on and we will track going forward. Okay, so this is what we weren't able to do last week. We've kind of went through this here. We checked the sector. We put the max risk in place. We put the position sizing in place. We've got our set orders in place. We've actually gone through our orders here. The only thing left to do is to journal this trade. Okay, so if we go and pull up our spreadsheet here for a journal, you can see this is a clean journaling sheet here. Basically, we'll want to put in our information in here. Okay, and there's certain ways to fill this out. So in this particular case, we're buying long stock, so it won't have an option strategy. We're assuming that we're going to get it tomorrow, so we go 7, 5, 18. Okay, entry price, we're buying it at 44.25 at the most. There is no expiration date. There is no dates to enter. Now, this is the most important part, is this notes here. What we want to do is put why we bought it. Okay, so we bought Cree on a bullish retracement. Bullish retrace, right? Retracement. So we could put with confirmation. Okay. You might want to put, sector in same direction. Okay. You could put anything else like, expecting to do a covered call on this later. Whatever it is, entry size, sorry, we should put in our 195 shares here, right? This note section, what you want to do is put as much detail in there as you can, because that's where you're going to go and you're going to find out if you've done something wrong or not. This trading journal is for you to learn about your trading style and any mistakes you might make in and what you're doing well. All of that's in here. So the more information you put in here for yourself, the better off you're going to be. Okay, so then you just save this and we wait, and obviously if it hits our target, then we put in an exit order, and it's going to tell us how much we made. If it hits our stop loss, it'll tell us how much we lost. Okay, so that's pretty much the manual way to do this. Next week's video that I'm going to do for you guys, I'm going to show you how to do this using some other spreadsheets that we have that I showed you guys inside the rookie blog before. So I hope you enjoyed this video. This is kind of what you do, is you do all of these steps that we've gone through to get into a stock trade. After we get the next video done, then we'll start looking at option trades as well. All right, happy trading all.